where we get into the facts and information of what takes place to be a successful trader. We get rid of any of the hype or flash. And today's video is going to be really simple. It's the end of, today's the first day of April, but it's also the end of the month. So this week I will go over all the monthly charts, but today we're just going to review what happened. There's some really key breakouts on some things. And I also just want to review some of the ideas that I was asked about on YouTube, Twitter, or via email. And we're just going to do a recap of what's going on out there in Stockland right now. So very quickly, Airbnb is where we're going to start. And I'm going to get rid of all these segment lines and all these horizontal lines, and we're just going to start over. Let's get rid of the indicators for a moment, and let's just look. So you can just see that you have this enormous base right here, right? So let's just start there. Okay. Every time you undercut this base, 177, what happens? It bounces through it. This is really a key area. I mean, you can literally trade off this area. I mean, it's done it 1, 2, 3, 4 times, and you can see how it flipped that area over here, right? If you go back, you can actually see that this area actually goes back to here, where at one time it was, support and resistance. You can actually just make it over here, and you can just actually see what I'm talking about, right? So you can actually see this area even here, and then how it flows over. But now that that's moved on, this is really roughly where you're at. So what does this mean? Well, the next thing is, let's take a look at here and just take a look at what's going on. Okay, so 216 is resistance. So you just have an enormous base that's been going on since the beginning of the year. We're not going anywhere. So we can overlay the indicators in, but they're just going to go flat. They're not really going to tell us anything. So right now, those indicators are telling you nothing. We also have volume dropping. So the only real indicator I have here that's showing anything is this 5-8 crossover, and that 5-8 crossover has worked here, it has worked here, it has worked here. So you can buy on that, but your stop has got to be down here at like 177, 178. So that might be a little too much, and especially now that you're running into the 50-day. My advice is to look for a break above the 50-day, a close above it, and then maybe use a shorter term time frame to try to ride it to the 216 line if it's something you want to be in. Frankly, I don't have any interest in this until it breaks out of this base. And if you're a pullback trader, you really want to be buying it closer to that 177, 178 area. AMWL, this is a blast that we were looking at a long time ago, and I actually think we had it in the newsletter. So let's just review this and get up to speed. A lot of charting going on here. All right, so let's remove all the horizontal lines, and then we're going to remove all the rays, and we'll get rid of the segment lines, and we'll just start completely over. Okay, all arrows. So let's get rid of the indicators for a moment and just look at price. So really, you can see from when we came out to how we're doing, right? And let's just look at opening price. This was opening day, and you can see how it broke that level, and it really has never looked back. You really need to be careful with these, because you can see how you can get lured into this, right? Because you have this, you can even go to here with it. All right, you have this line here, and you can see how the trajectory of that line actually fits. You always clone these lines, because that shows you what your true trajectory is. So you're really not out of anything here, right? Nothing's really changed. So up here, you may actually see selling. And you might even be stopped by some kind of moving average, and you're really not. I mean, you're above the 5 and the 8, but to me, you just don't have. There's no real reason to go near this down here. You buy it at 19, it goes to 22.5. I mean, maybe it goes to 22.5. This stock has not been above the 21-day moving average since it was $33 in February. So I would just be looking at avoiding this until it figures out what it wants to do. It's very clear that it's broken. I mean, it's broken its first day, and you don't really want to see that on a new issue. So I would just avoid this. Maybe it breaks it through here, but 22.5 and above this 21-day, which it seems to be having issue, would be my first line that I'd be looking at. As always, what we go over here is extremely timely and actionable, and I would recommend that you click the subscribe button and also click all notifications, especially this weekend because I'm going to do a big top 10 list as well as monthly videos on the end of the month. And I'm also going to do another of that Trade Like the Pro series on the relative strength indicator and how to use it, just like we did with Bollinger Bands. That seemed to be a hit. So here's your high on BJ's, right? So you respect this 200-day. We're crossing the 21 and 50 here. I mean, here's your real issue, right? I mean, we even stopped there again today. You can just see how we're having a major issue with that. Now, if you get rid of this, and you might even see this rising wedge right here, you're right on there, and you just rejected a support level. And what usually happens when it gets to this level, right? I mean, there's a pattern here, and that's what I'm trying to get people to understand. See this pattern? See how it broke that rising wedge? What happened? Boom, it came in. Tried to break it again, couldn't. Little rising wedge, breaks it, comes down. Again, breaks the rising wedge. We're setting up again for that. So this really is where you would probably sell the stock in the hopes that it does break out there. You may just throw this right here. You can see that line. Drag this down a little bit. I mean, that's really where you want to buy it at, $37, $38. I mean, that's really where you want to be in this. But you can see this complete base all the way back to what? Is this August? So this is not something that I really need to be jumping into right now. If anything, I'd be interested when it gets through this 47 level. Until then, it's 3 points. I would just wait. I don't see a big hurry here. Now, I do like how these averages are starting to curl up, but they've done that here, they've done that here, and then they roll over. And you are holding the 200-day, and the 200-day is creeping up. So this may go this time, but I'd want to see it go, and I'd be looking at that 47.34, let's just call it 47.50 level. So this is what you call a classical rejection, okay? And that's exactly what this was. Really, we can all make excuses for it and say it went down because Bitcoin went down, or it went down because of light volume. It doesn't matter. It went down. So it did a couple things. One, it basically closed at the support and resistance line, just a little above it. It went to the 21-day and rejected the 21-day. So, and that's pretty clear here, right? So now you have it trading above the 50 and below the 21. You're trapped here, and I don't see, and considering how far down you are too, you have to take this into an account, right? Hold on 1 second here. Let's take a look at this. There we go. Yeah, I mean, you're down 44% in 2 weeks. I mean, it's a lot for it to come back right away. So this might need to, and sometimes this happens. The first time's not the charm. You have to test it, come back down. Usually it's the second time because then it builds a base a little bit more and then goes. So I would not be surprised to see this roll. What would concern me is this. It's not every stock's going to go back up, right? You see this line? So you have this huge trajectory, and the minute you break a lower high off of this, you're going to see selling. And when that happens, you're going to come back to this lower trend line, which we held. So this is not something I would chase here. I would wait and watch and go from there. Let's get rid of those patterns and click indicators. And I get it. I mean, it definitely looks like it broke out. There's no question about it. But it just doesn't seem like it's going to hold. I mean, we're already rejecting. We already came back in. And it is a light volume day, but let's not make excuses for it. So this is CMLF. I thought we would have the symbol in here. I'm sure we looked at this one before with all the lines on it. So CMLF. Let's get right into this. So I'm going to leave this line, and I'm going to leave them there for a real simple reason. This line's been here for a while, right? So this is why it does pay to leave these lines in, and let's just walk through this lesson real quick. Even trend lines of older channels, like this was a falling wedge, and then we attempted to break this and we failed. Even these older trend lines, they can be used, and they can be used as support. And that's exactly what happened here. This was your buy, and you could see, if you were looking at the left-hand side of the chart, you saw no reason to buy there. But somebody could have bought that. Now, here's the other thing that you could have seen. right? I mean, that was the classic buy. Look at the double bottom. So here's your 1367. You undercut down here. You overgap, or undergap, I shall say. So down here, right to this line. And then you bounce right back up and close there. I mean, there's your buy, but this is your stop. That's where your buy was. Now what do? From here, this should run to fill this gap. Once you're back in the gap and over this line of it, the majority of the time, the highest degree of probability leads you to this 19 level. So if you're interested in from 17 to 19, there's 2 points there. But your stop really has got to be the low of this bar. And the low of this bar is 15. So I really don't like one-for-one trades. So I may wait and see if this breaks that 19 level, because then I'd be more interested. And that's going to get you above all your moving averages, everything pointing up, and it gets me back in my channel here, and the trajectory gets right back on track. So I'm more interested in 19 than I am here. But this is definitely shaping up, and you definitely have a bottom in place. So DraftKings, look, I mean, I don't really want to get into too much fundamentals because I don't want to have the debates on the fundamentals. This move that they did with WWE was probably going to go down as, let's get rid of all this stuff and let's get rid of these. Is probably going to go down as one of the things that they're going to regret. Let's get rid of all these circle annotations and let's just look at price here. So, and the reason I say that is because, I mean, the majority of people, I hope I'm not bursting anyone's bubble here, wrestling's fake. And you just tied tied a betting company to something fake. It's not a good look. And you saw how we just rejected off of that. Now, if you just throw in, I'll just give you one, you only really need one. So the 50-day is the indication of where institutions will sell. And you can see clearly that we're getting some support here, and hopefully that continues, and you hold this lower base. Now look at this line here. Let's just draw this. It's pretty clear, right? Right on those arrows. So you could see how you held that support line, right? And that was your buy if you wanted to give it a shot. If it broke that long-term trend, it could really crack there. And maybe it came down too far too fast, but I just don't see this going anywhere right now. We did get above the 50. The 21 is just looming and pointing down. And we can throw in the rest of them now, and just take a look. But I just don't see it. I think you're in for a lot of pain here. And I don't think you're getting above this 21-day anytime soon. Maybe it happens, but I just don't see it here. This looks to me like it's going to consolidate and then maybe eventually roll over. It really has struggled breaking out of these highs, and this line has just been its absolute nemesis. They did a secondary here, and remember, and the stock came all the way down to here on that secondary, and then every time we get above here, every single time there's just selling, and now we're rolling. So you're really trapped between these two lines. I mean, if you were heck bent on buying it, you could use the 6420 line as your pivot, and then if you close below it or that bar, then I would blow it out if you really wanted to be in it. That's how I would do it. But I just think there's better opportunity out there. HEPA is a little guy, and let's just run through this. It looks like these lines go back a little further. Let's look at a weekly real quick. Yeah, that's not going to be helpful at all. So let's go back to a daily. All right, that's going to bother me. So, okay. So let's go to these indexes. So really what you can see, look, it's this line was probably from here from last time. You can see we just hit right on that line and we rejected. That's why it's good to get rid of all your indicators at some time just so you can look. You have this major downward trend that you broke here, and then you rode the line down, and then you broke through it again, and then you came down. And I did state this earlier that, sometimes you break out and you fail, and it's the second attempt. You have a little trend here, and you have to remember with these little stocks, they're much easier to manipulate. But you have a little trend line here. I mean, you really can't buy this thing until it's over $2. You need to flip that line before you take a look at it, and then a break below it is where I would get out of it. And we can throw the indicators in now and take a look. Yeah, I mean, you really just got to watch this. I mean, it's having trouble with the 50-day. It keeps hitting it and selling, so maybe you just even wait for it to break that 50-day, which is an extra, 220. Because if you break above that, then you should go. And then you'd have these little areas too that you could look at. And you might be able to see this wedge, but I'll just draw it anyway. So you could see how we're just completely wedged in there, right? So when you break that line, this convergence, you might get a push. But you still have the 50-day to contend with, and I'll throw them back in. You still have the 50-day to contend with, and you're below the 200-day. I mean, this is just, to me, it's just not worth it unless you're looking for very specific news. If you're looking at, you're in this, as I believe one of the guys is that asked me to look at it, you really need this thing to start getting up here and getting above the 200-day moving average if you're going to stay in it. Other than that, it might be time to go and, move on with your life. ICLM. Let's go take a look at this one. There we are. Okay, let's throw this up here so people can see it. Let's change the color of it. And for people that ask, I'm using TrendSpider for this. And there's a link in the bio, and they'll give you a 7-day free trial. Well, I mean, you're holding that 2117 line pretty good, right? On top of that, you got a little break here on a little pattern. So if you look at this, like here, look at this. See how you gapped and that was your low and you never broke it and now you're still above it? Really where you have to go now to facilitate this pattern and have it confirmed is 2565. That's the level you're really looking for, right? Once you get to there, you should probably see some movement in it. Let's pull this back down and let's open this back up here. All right, let's pull this all the way down and open that up a little bit more so we can really get into this. So this is really interesting because this 5-8 crossover looks great. You hop the 21-day and you have all this room before you get to the 50. So really clearing these lines, I think this looks fine. Now, if I took out the lower low and fell below this little wedge line or below the 21 you could even use, that would concern me. But other than that, this is setting up. It looks like it's setting up to move higher. So this would be of interest if somebody was interested in being long. And I would use these levels. I mean, you're gonna have an issue here, and you're gonna have an issue at the 50-day before you get back up. But this is shaping up nicely with this double bottom right on the support line and how we held the 200-day. KBNT. Yeah, I mean, it's just not really much to say here, but let's go through it. So, okay, KBNT. All right. So, I mean, you're not really going anywhere. You can even see here how you can't get above this 840 line. I mean, you really don't even need moving averages. They're probably just all going straight across. Yeah, I mean, they're just all going straight across. So just looking at price, I mean, you should be able to see this. You got to get above 840 and close above 840. If you don't close above 840, there's really no reason to own this. It's very similar to what's going on in BNGO right now, and I'll just show you that one. Like, until it can get above a certain level, there's really no reason to be involved. And like this BNGO for me, it's the 795 level, and we did it yesterday. And then we rejected it today, and we closed below it, and it's a bearish engulfing. So this is not of interest to me, this BNGO, and I like this. I like the story and everything, but I trade technicals, so it has to fit my process. But just look at that. I mean, it ran right to that line and just rejected. So maybe it needs to roll again and build before it pushes higher. But right now, BNGO is just not ready for prime time. And let's put one more of these in right here while I have this out. I don't know why this doesn't want to go, but it doesn't. There we go. All right. So you can see this, right? You see the wedge. And the fact that you close below it, and it's a bearish engulfing bar, I would just watch this. But I really need to close above this $8, and the one we just went over, this KBNT, is no different. Like, you have to close above this 840. You're not able to do it. You're not able to sustain it, and so that would be a concern to me. KLAC, for those that watched the video this past week of like top 10 ideas, they probably did fairly well today. This one we got in, or we stated to get in, rather. We didn't do this one in the newsletter, but you broke down here. I have roughly 300, so you're looking at 50 points at this point. We just started gapping levels, and it looks great. Now look, you can, on this KLAC, for those that are in it and took the trade, you can still get to this 380 line. Like, there's plenty of room here for this to get to. And I'm going to show you Lamb Research in a little bit, and you can see how Lamb Research even flipped their line. So that makes, it shows you that semis are really strong. Now overlay the indicators into this and look at them all. They're ready to rip. And the other thing that's really interesting that you should be looking for in patterns is you have a gap here and a gap here. That means they literally couldn't get in this thing fast enough. People couldn't buy these fast enough. And that could also be the Micron news, but price always precedes what's going to happen. And that's what's transpiring. So this was one idea I gave yesterday, this LABU. Look, you opened up, you ran a little bit, and then you just collapsed at the end of the day. I don't think this move is over for the people that are asking about it. I do want to close above this 200-day. And on this, I want to do the weeklies later, but you can just see this is on the weekly. You came right down to here, and it's your first green bar from 2-3 weeks. So I'm okay with this. I don't think that we're in a major area here where I need to panic. And you can see right here on the weekly, I'm going to use that line right there. So you held the support line, and it looks like we're going to go. It looks like we're going to hold there, and I would expect you can actually go all the way back here with it, and you can actually see how you can flip this, get one higher bar off of this next week, and you could see how we could run here, and that's just my thought on it. But I think you could move here over this 86.5. You could see an influx of capital come into that. So I'd still keep that on your radar. This is Lamb Research, and this is actually the weekly. And we're going to go to the daily on this, so you can see this. So this was the chart, and this was, we talked about this one on Saturday as well. Yeah, it was right here actually. So look, it was good for 100 points, 90 points. Here's the thing about this. Now you've cleared, you're out of that channel. So technically, it should run. And let's look at the volume and see what came in today. And yeah, look at our volume. Just look at the volume that's coming in. It's all above average. So I think that it should continue to go. The question that you really have to think about, and this line's kind of immaterial right now. What you have to think about is it worth buying here? Look, if I was in this, you stay in it. Do you add to it here? No. Because if it reverts back into this line, right, like here, this is a good example of using Bollinger Bands on the upside, okay? So here, and we did that video on how to use Bollinger Bands, and I'll link that at the end. But you see how you broke above this? This is a lot fast for a stock, and now it's widening, which is great. We like when they widen, but it'd be nothing for this to come back into this level. You don't sell because of this. Like, you don't sell because you're out of the band. But it does mean that you probably have to be really careful in buying, because if we regress back, it could snap back. And you really don't want that. You don't want to be involved in that if it snaps back. So I probably wouldn't be adding here. I'd probably wait for it to come back down, maybe test this 583, and then push higher. That may not happen. But that's how I would look at it. I would not chase this now. You can see every time it's gotten to the top end of this channel, it's come back in and touched the lower end of the channel. So to me, it's just not something you would trade or touch at this point. If you're in it, congratulations, and just keep moving your stop up. Mara, we're just going to have to go through these. Like, all these stocks are trading differently now. Like, and you're just going to have to realize that they're decoupling from what they are. So this 49.41 level is just its nemesis. We can't close above there. You're pointing above all the moving averages. We're holding the 50, and you broke above this, which is great, right? And then you challenge this, which is exactly what you should do. Now, just historically, when you challenge a breakout, the first time usually fails. So you might want to just remember that and even write it down. The first time that you challenge a breakout, it usually fails. And that doesn't mean that it's over. It just means that it's not going right now. So this could come back down, test a support level, and then go. That is possible. So just because it failed today does not mean it's going to, it's going to fail. And you might remember that when we did the U.S. steel trade. So for those that don't know, that there's a newsletter. It comes out 3 times a week. And in that newsletter, it's free, and there's a link in the descriptions for it. So Sunday, Tuesdays, Thursdays. So we did this one at $21, right? And this is where we bought it on this break. And then we ran. Okay, this would have been your first breakout, right? It didn't go. Came back down, gave us the second attempt. That's when we bought it. This time it got through, but it didn't go. It closed down here. Second attempt went through. Now you see how you're fighting this upper trend line? Whoops, just put that back for a moment. See how you're fighting this upper trend line? Okay, so the fact that you're now flipping below that, this is not where you buy the stock. We have a position in, and if it comes back down to 21, the stop will be moved to 21. It hits 21, we'll blow it out and go on to the next trade. We did trim it up here. I mean, I was pretty vocal about that, especially with what's going on with the company and the infrastructure bill. Anything in politics always takes forever. So. You got to realize that you have to take the good with the bad if you're going to trade on news like that. But I do think that you need to be aware of those levels and leave those levels there. So NNOX, I mean, I really don't have to say it. You can see that this is not a true double bottom because we didn't undercut this one and then we rolled. And you're rejecting this line already. You're already rejecting this. Right? You've already rejected it. So this is not something you go near. You need to flip this line on NNOX, and let's throw in the indicators. Yeah, I mean, you tried to get above the 21 today, and you failed. So, this is not something that you need to run into right now. This has got to prove itself. And I'm not really crazy about the slope of this 50-day either. And look at how volume is dropping off. So this is not one you have to run into right now. I mean, I could actually see why people even here, today was the day where they probably sold or shorted. So not what I have to jump into. OCGM. Let's get rid of these indicators for a moment. And let's just look at what's transpired because this is fairly easy to see. So come all the way over to here. And let's use that. We'll use the close and that open so you can get a much clearer picture of what's going on here. So you can see how this $8 level is an issue. Ran to it the other day, rejected, broke it, never came back. You see how it was support for a while, that $8, and then it flipped to resistance. Look, until you're over that, you really can't be in this. I don't know where this is going, but I would not be a buyer of this. And if you overlay these, you're now below the 50-day for the first time. There's really no support here on the stock. If somebody's in this, and I believe somebody is, and they're telling me that they just want to hold on to it, I don't know for what purpose. Like, I don't know where you're going to, where enough's enough. Is $3 enough? This is the one thing that I noticed the other day with people and talking to them. You really have to set up a process on when you hit a stop and you're at that stop level, okay, you need to sell. Like, that's it. There's really no debate about it. You just get out. You can always buy the darn thing back. But if your stop was $8 and you're not out at $8, now you're at $6.80 wondering what you're supposed to do, hoping to get a price you could have had 5 days ago. And instead you're just tormenting yourself as it keeps dropping. So looking at this and this 350 level, that looks like where you could be heading. This is not something I would buy at all. So this is open, and this was one that we traded before. And it looks like we got stopped out for a 50-cent loss on this one. And you know, let's just, well, we really don't, let's get rid of this. And we'll get rid of the arrow here. We really can leave everything else. We rejected this channel. You know, this was the trade we did where we said we're going to trim before earnings. I remember it now. And we trimmed as it broke out of the top of the channel. See how this looks very similar to that you know, Lamb research trade? So how you pop out of those, right? So you see you came back down. You broke the lower end of the channel. You rallied back to the 21-day on that. Guarantee if you overlay Bollinger Bands with that, you'll see something that we just talked about. See how you broke out of the Bollinger Band and you snap back into it, right to that 21-day, right? That's what happens. And then it comes up to there, and then what's it do? It came back down. So it's doing what it wants to do. It reverted to the mean, and now it's doing what it wants. And now what you're saying is, look at this consolidation. You have a rising wedge. Rising wedge is usually end bearish with a frozen rope. That's exactly what happened here. So what do you do now? I mean, I didn't even take out a lower low on this move down. I don't have a spike in volume telling me that we've bottomed. I had more volume here than I have here. So I'm not a big believer. I have this huge overhang here, right? I mean, you can see that overhang. So I mean, I don't really see, I mean, you can even make that super tight. I don't really even see what my issue is here, 22.5, why I would have to be in this. I just don't see the reason. You know, there's better ideas out there. We can overlay the indicators again, but it's pretty clear there's just no love for that right now. So this looks like it's a new issue, and so what we'll do is go to a 15-minute chart and get some data points. So when you look at a chart, you really can't look at, we're probably going to do a 5-minute chart actually. You really can't look at, let me just do 10. So, and let's get rid of these indexes. You need at least 30 lines to be statistical significant. And if you don't have that statistically, it's not really significant. So you can see how this 1380 line, which was the bottom, you undercut it, and then boom, you bounced. You're now hitting the upper end of this band. So what do you do now with this? And let me put the symbol up on this one because this is not one that I'm familiar with. And whoever wants to see this, that way they know that this is the one that we've gone over. So this PSFE, so here we are, right? There's no reason to go near this yet. You have the one line right here, the much tighter line, right? You can see that. You're right on it. You close right on it. You really want to break this one. You really got to get above that because then that gets you to these levels. It starts getting you to, for this 1480 level, and then it could take you higher and revert you higher. Right here, you don't do anything, and you can overlay the indicators and see that they're basically worthless. People would be like, "Oh, the 8 and the 21 are crossing. You need to get into it." Yeah, but it's in a base. Like you're in a base position, and this is happening. So that doesn't really do anything for me, right? They crossed here. So what? It went up 80 cents. I mean, the trade's over. By the time these cross, the trade's over. So in a base, when these lines are crossing back and forth, it doesn't matter. It needs to be in a trend. So just remember that when people talk about clouds and moving averages crossing, and I talked about it too with the 3 and the 5. If you're in a long base, which essentially it has been, right, these little averages don't mean anything until you're in a trending market. The Qs we'll do at the end. We reviewed those. Let's do this QRVO. So we all know what space this is in. We don't really have to get into it. It's just textbook breakout. It's textbook. You have a huge base, right? And based upon that, it's gone. So you have to drill down, look at the volume. It's not the greatest volume in the world. I would like to have seen better. But now in that breakout, you're at that 192 level. Hopefully you can flip back into this trend line right here. Kind of see that right there, right? So you're right there, and then here on the other side of it. So, and now you have this base. So if you can flip into this major one, go right here. So here's this line. See how this became resistance. Here's where we hit again. You're running right into that. So you need to be careful here because this has to flip back into that. Now, if this flips back into that, you always clone these so you have the same trajectory. Funny how that works, right? Fits perfectly. So if you flip back into this, then you could be going to up here, this 220 level, right, by getting into that. But you need to flip back into this channel. So this one right now is not really material. Let's get rid of this. And let's put this up with the price and the QRVO. There you go. So that's what you really have to focus on here. These levels. This 192, but I need to flip into this channel at this point, or that channel is going to be resistance. And let's get rid of these indicators so you can see what I'm talking about. Right? You see how you're here, and then you rode this line, and every time you broke it, you fell back. Truck got near it, fell back, got near it again, falling back. So I need to flip back into here and then push. And if I do that, I would be interested in buying that. And that very well could happen. I mean, semis are on fire right now. QS, look, I mean, we tried to break out. It didn't work. You have another, besides this long-term trend, you have, some more resistance up here at $60. These gaps, and then they just sold down. I mean, I just don't really see anything that's got me, really excited. I mean, I gapped right into the 50 and the 21 day, and I rejected. And I have now that you know that that's where you rejected, I mean, just look at this. Get rid of this, and all I have is a base right here, and all I have right here. Right, I'm gonna just go right to there. You can see, like, you really come down to here. So you can see how you have this base right here, right? So why do I need to be in this? I mean, there's really nothing going on here. If you're buying it based upon this lower level on QS, you're fine. But other than that, this is not something you really need to play with. Riot, we talked about how these are all decoupling, and we're going to throw in the indicators here. Look, the 5 and the 8 are crossing. I'm still in an uptrend because this line, when we break this line, I find support. We drew this a while ago, and it's still respecting it. I need to get above this 57.33, and if I get above that, I'm going to go higher. And where did we get to today? 56.82. So we get up to there, and then we reject. And you probably reject at one of these peaks, these older peaks over here. So I have to flip back into that, and we haven't done it yet. Now, first times usually don't work. I do think you're going to respect this lower trend line, which just means that you might consolidate for about a week before it happens. But I do think it's going to happen. And then you'd be above all the major moving averages, so we can take those out. And you could even draw this better so you can understand what's happening here. So now you can see how you're coming right across this. And flipping that and this thing could be hitting new highs. So I would definitely keep this on my radar. This is setting up. The fact that we're holding here, and really also this is the fact of how we're responding to the 50-day and this lower trend line. That's really important. So I would keep Riot on my list, and I'd be paying attention, looking for that breakout. This was one I mentioned in yesterday's recap that looks like it was ready to go. Candidly, this would have been in the newsletter today. The only reason it wasn't was because I was looking more for a $38 price. And we were going to, once we did that move, it was pointless to put in there. This was the day, and I wanted to get a close above the 50-day before I put it in there. We got the little break yesterday, and then we exploded out. But look at how these averages are turning, and now we're above. The next level, the real next level for this is 43.30. Getting and pushing through 43.30, and I'm just going to draw this so you can, you can kind of see it, right? Getting above that, you can get back in this channel. Channels on the other side as well. This thing's just going to be hitting new highs within 2 months. So there's still opportunity here. I'd be looking for it to pull back to that 38, 39 level and then push. But right now, there's really nothing to do. This looks like it's setting up, which means semis are setting up, and I've been pushing them for a while now. but this really looks like they're getting ready to move. So on pullbacks, I would be adding to this, and I would be watching this one through 43.30, and it probably rips. So you're going to have a lot of people playing catch up on semiconductors. They're underweighted right now across tech for people that are buying, and that's why you're seeing the moves that you saw today and the other day in KLAC and Micron's numbers. And they're underweighted, and those stocks are crushing their earnings reports right now. So Tiger, we talked about this one yesterday. Let's just get right into it, right to the 21 day, and we closed here, right to this 20. This is where I said I would be a buyer. What did we do? We gapped right up into it, and then we just sold down all day, and then we sold down right to the close. Is it the worst thing? No, it's not. To me, it just means that we're going to bounce around a little bit, and now we have another wedge that's forming that I'm just not really crazy about. I don't see a reason to jump right into that. This looks great, and there's someone that keeps texting me about this one to get in. And it's funny, you get so busy, but this looks great. Now, this is really very interesting because you flipped this channel. So this is a very simple trade. If you wanted to be in this is not out of line from 61 to 63. It's 2 points. You'd actually use the low of this bar as your stop and a break above this to add to it, right? So, and when follows that, so you would add the low of this bar would be your stop, and a break above this, that would be where you could buy it. When you flip these lines and you're in trends like this, see this trend, you see this 5-8 flip? This is significant because I'm in a trend. If I was basing down here and it flips, I really don't care. So, that's very important to understand the differentiation. But look at this. Like, you really just, you actually overgapped it. You just, boom, and you took off. I think this is very interesting. I don't think this is done by that move. Usually the first 8 out is not done. So you do have the opportunity here to try that trade in the way I just walked through it. If that's something that's on your list. And then I'm going to do the Qs in a moment. And we just have 2 more that we're going to finish up here with real quick. UPST, down here at 80, it just ripped. You have this line, and I've been talking about it. And this is your resistance line. And every time we hit it, we reject it. So I expect to hit it again. I was hoping that we would hit it and flip and explode up one more time before, as an exhaustion, but it doesn't seem to be doing that. So let's just see how it acts. I'm very surprised by the volume today, and I'm very surprised how it closed. But you really need to get in here and get above this line. This one, now it's 160 here. But look at this close, too. This is the second highest all-time high close the stock's ever had. And we're respecting 105. I don't know that we're going to get a huge crash here, but 105 is being respected, so we need to respect that. This is one that we did in the newsletter, and then earnings came out. We made like 20% up here, and I said trim before earnings. Earnings came in, broke down, hit our stop, which was our break even, and blew it out. Look, the space that they're in is on fire as far as rates. They're just running through the roof right now. That said, let's get rid of these moving indicators. And why? Because we're basing, so they really are irrelevant. So this was the bar that broke out and then failed, tried to get above it and failed. What line am I going to tell everybody to look at? 26.55, right? Flip 26.55, break out, get back into this channel. This channel's immaterial right now. Go here, draw a new channel. And now look, now you can come up with an idea. Now I'm going to come into 32, 33 bucks, roughly, okay? But close above 26.55, 26 3/4, then I would get interested. So I just want to go through this yesterday, and then we're wrapped up. On the Qs, I was trying to make a point to everybody. Everybody's saying you got to look for this indicator, you have to look for that indicator, and I'm not knocking people that have indicators or people that create indicators or the people that are that are out there that use indicators. I use them all the time. What I'm simply saying is that you have to learn how to read price, and with the movements that we saw here, we're clearly stating that this was coming, that we were going to break. And I walked through yesterday, and I'm going to do the video this weekend on relative strength indicator, so you people can understand how to utilize that. But you're going to see And I'll throw it up here real quick just to give everybody an idea. There we go. And we use RSI. Great. Perfect. And we're going to get rid of ultimate. And we'll just throw you in. Okay. So now we can go here, and let's just get rid of all this noise for a moment. So here's your price. And I was walking through everybody in the positive divergence yesterday of what transpired here. But look at this, right? You broke out, and that's it. This is telling you that you're going higher. Does it mean that you can't come back down? No, you absolutely could come back down and test it and then go higher. But we're going higher. And by understanding these moves, these very tiny moves down here, you could read that we bottomed. And everybody that's been getting the newsletter knows that I stated very clearly on the 9th, this was the bottom. And it was based upon this movement here and some other things in price action, but you rallied right to here, rejected, retested, second time. And I just want to walk through because I did mention this before. You know, the first time through, you usually don't go. And what happened here? We didn't go. We came back down. We didn't go. Tested 312 again. It's like Groundhog Day. And now we've gone. And now you're setting yourself up to hop back in this channel. And I'm going to go over this more this weekend. But, you know, you're setting up for a massive move here into end of April, early May, where this thing seriously looks like it's going to take out new highs. And by the time you get to the upper channel, you know, this thing could be substantially higher. So that's it in a nutshell. As always, please like this video because I'm trying to get in front of as many people as humanly possible, especially if you find it helpful. And as always, reach out to me in the comments. Let me know which one of these ideas you like the most. Thank you very much, everybody. If I don't talk to you, have a great weekend.